Welcome to Financial Issues, where we help you steward faithfully by honoring God with your investments. Now listen in as we give you the practical tools and advice you need to become a biblically responsible investor.
This is Financial Issues, where we help you defund darkness and fund the light by investing with biblical integrity. Wonderful to have you all with us this Wednesday morning. Seth Udinsky, Samuel Case, and your host, Mark Minnella. Mark, great to be here with you, brother.
Good morning, everyone. It's good to be here. What is this, Wednesday already? You know, we talk about the clock flying when we're on the air. The weeks are flying by as we get to come together every day, talk about the markets, talk about finances, but more importantly, talk about God. And that's really what this is all about. I know some people say, no, Mark, it's about helping me retire. Okay, it's about that. Or no, Mark, it's helping me get my kids through college or to be able to pay the bills. Okay, it's about that too. But the bottom line, it's all about God. All those things don't really matter. If we don't keep our eyes on God, then we get lost in the moment. We get lost in the temporal, and we lose the peace that surpasses all understanding. We lose the joy that we feel of our Father by being in Christ and walking in his ways when we lose that focus. So despite what everybody may, or some people may think, this isn't as much about finances as it is about you and I growing closer to Christ through our finances, through our stewardship. And that's what we're hoping we're bringing you every day, so you can feel that peace, you can feel that joy. And that's what we're going to do again today, isn't it?
Amen, Mark. It certainly is. We've got a lot to talk about, folks. The phone lines are open. Give us a call right now, 610-363-1110. A lot of things to talk about, guys. Of course, we had, Mark, your commentary as well as the sell alert come out yesterday. Listen, folks, if you've got questions about that, give us a call right now, 610-363-1110. We would love to hear from you and to try to help you through everything that's going on. Of course, we're keeping an eye on what's happening in the markets as well. And, guys, I think that's an appropriate place to start here. So we've been seeing, Mark, what feels like a little bit of a downturn, particularly in the tech sector. We've been seeing some sell-offs there. Of course, we have an Nvidia earnings call later today, which will probably have some kind of impact on what the markets do, at least tomorrow. But Sam, just give us a quick breakdown here of what's been going on in the tech sector lately.
Yeah, very big news today, although maybe not as big as Trump's suggestion that Chick-fil-A, or rather McDonald's, add more tartar sauce to its Filet-O-Fish. So
I did not know
biggest
that.
News, but this is secondary, but still important.
Hold the press.
I know the world's ending, and that might be part of this. There might be a tie-in. But yes, major indexes saw their fourth consecutive day of losses yesterday as that global tech sell-off continues. The Nasdaq now on track to break its 7-month winning streak as a result. Meanwhile, Bitcoin dropping below $90,000 on Tuesday, continuing its drop from a record high of $126,000 in early October. I think they wiped out, it was $1 trillion in gains or investments, which is just wild. Many tech investors also invest in crypto at the same time. The pullback also comes amid concerns of overvaluation in the tech sector in the wake of the AI boom, and as investors brace for Nvidia's earnings report later today, as Seth mentioned.
So, Mark, what do you think? What do we make of this?
Well, there's a lot to talk about in this. One of the things is, and the thing that hit me the most as I was looking at this, is that we are so used to this long bull market that we've been in, this climbing market, and this market with several bubbles that we've seen in it, mostly in the tech, AI, things like that. I really want to see if maybe we could talk a little bit about anchoring ourselves back down to the reality that the market is a roller coaster. It is a jungle, and the jungle of the market is there designed to eat every one of its investors alive. You have big boys and all sorts of institutions that their whole goal is to take advantage of your trading or your holding or your selling or however you want to look at it. So we have to get back to the reality that the markets go up and down. We here believe in long-term investing. What that means is we believe in investing in companies that have the steel to take it long-term and have the potential to rise. But that doesn't mean that those won't go down when the markets are all pulled down by the panic of the world. Remember, the world does not have a solid foundation like you and I have in Jesus Christ. They don't have the Holy Spirit in them to say, it'll be okay. God's got this. There's a plan for this. There's a reason for this. They don't have that. So they have to panic when their money is pulled back, when their lifestyle, which they've constantly upgraded, gets a don't have the peace to say, that's okay. God's got this. He's got a reason for this. It's either going to draw me closer or my kids closer or somebody I know closer to him. It'll give me the opportunity to talk about God like I'm doing right now and his sovereignty over everything. We have to realize that these markets do not go up. And I'm not trying to lecture anybody. What I am saying is I've seen it over and over in the 35 years that I've been in the markets, that when because the bull markets are longer by oftentimes 4 to 8 times longer, what happens is we get lulled into thinking we're going to invest and the markets always go up. We're going to make double or triple digits every year. I know some people say triple digits. Yeah, there were years in bull markets where we made over 100% in some portfolios when I was managing money for my own advisory. That didn't happen often, but it happened. But the bottom line is that the reality is we're going to face downturns sometimes. And during those downturns, if we don't want our peace to be surrendered to the secularism of the world, what we have to do is realize that happens and God's got a plan. If we've done everything we can do, utilizing the wisdom and the faith and staying true to our values, staying under godly stewardship, then whatever is happening, it's going to work through, because usually the downturns or the bear markets, if we ever go back into one of those again, which historically saying we will, those things don't last as long. And we know that. If you've been with us for a while, you realize that long-term investment means we sit tight, we don't panic, we move on. If a company loses its deal, we'll move on from that. But if it doesn't, we'll hold on to it if it has its potential and it's made for long-term investing. You know, there's 3 things that I think we really need to be thinking about during times of pullback, Seth, Sam. Here's what I've been thinking about. First of all, you've heard us speaking about keeping dry powder available for these dips that may be coming up. We've talked about that for a while when we talked about doing tax loss harvesting starting a month or so ago. We said there's no rush to get that back into the market, to go and buy something right away. We might hold on to it for some of these dips. Well, some of these dips are starting to occur, and we're going to see better valuations on some of the long-term solid stocks that we love. So having that dry powder will allow us to buy into these companies that are on our buy list, or new ones that might go on because the valuations with stocks of steel pull back to a point to where it makes sense and they're more normal than regularly. We also have diversification as a strategy. Now, diversification across asset classes provides risk reduction. And it does that by if you have all your investments in, let's just say AI, technology, and then AI as a sub class of that. What happens is when that goes up, you do participate in that, but when it comes down, you participate in it just as hard. So by diversifying, what happens is when the markets do go down, you're also in these 7, 8 other different sectors of the market that aren't going down as bad because they didn't jump up as high. Yeah, granted, it does take a little bit off the gain because you're not in it all the way when it does rise up, and it takes leadership in rising up. But then when it does dip down, you definitely don't write it down like it did, like that sector alone does. So by being diversified and realizing that tech has gone skyrocketed, especially in the AI, where we have 300 PEs, price to earnings and valuations that have gone through the sky, we expect to see pullbacks. It doesn't mean some of the stocks in there aren't good stocks. What it means is that there's, as one person used to say, over-exuberance in the markets. People got lulled into believing the markets only go up.
We're getting
My goal
spoiled,
today,
Mark.
Yeah, getting spoiled. We have to realize that doesn't always happen. And we have to be ready for that. And don't let it steal our peace. And the third thing I'd say to do is make sure you start rebalancing your portfolio so no single holding drives the whole portfolio. I talked to a gentleman the other day, and I think that almost 70% of his portfolio is in one stock. Because he believed it was
good.
No. Right. Well, it's good if that's the one stock that went up, but when that one stock goes down, it's also not that good. So to keep your peace, to keep a good in portfolio, we need to stay focused on diversification, utilizing dry powder during the dips, and stay rebalanced. And that's where we're at today. We can keep our peace that way.
Good deal, Mark. 610-363-1110, folks. Give us a call right now. We'll be right back after this.
Navigating through investment options can be challenging, especially when you're determined to uphold your God-given values. Every dollar you invest is a vote for the world that you want to live in. Let your values guide your investment decisions and help to shape the culture in which we live. Become a beacon of light and pave the way with biblically responsible investing. Timothy Plan, where faith and finance collide. Before investing, carefully consider the fund's investment objectives, risks, charges, and expenses of the investment company. This and other important information can be found in the fund's prospectus. To obtain a copy, visit timothyplan.com or call 800-846-7526. Read each perspective carefully before investing. Investing involves risk, including the potential loss of principal.
Most people have no idea what their money is funding. That's why it's so important to know who you're investing in and what they stand for. At Financial Issues, we help Christians invest with biblical values. Our daily live broadcast covers the economy, markets, and even politics through a financial lens grounded in a biblical worldview. If you're ready to align your faith with your finances, go to financialissues.org. That's financialissues.org.
Preborn is making motherhood possible for thousands of moms across America.
I found out that I was pregnant. My family, they were like, no, you're not having this baby. I met Miss Linda. She offered to get me an ultrasound. That's where I very first heard the heartbeat. It was really a great thing that I was led to the choice to keep him.
To find out how you can support the life-saving mission of Preborn, go to preborn.com/FISM.
363-1110. Listen, folks, if you've got questions about anything that's going on, what Mark just talked about, of course, we'll be keeping an eye on the markets today, guys. I mean, Nvidia's reporting earnings, so that's bound to do something for the markets, as it always tends to do. Right, Mark? We'll be keeping an eye on it, though, and it's a good reminder to know where we're at, knowing the times, understanding the times.
Everybody's sitting on the edge of their seat waiting for one stock to give its earning report. And that's so silly. It's just wrong.
Yeah. And by the way, if you're a biblically responsible investor, you shouldn't be
You're not in it anyway.
Because they're not biblically responsible anymore. But that's good.
It's like 7-8% of the S&P 500's total return. I mean, it's market size guide. I mean, it is a driver of the S&P. So,
Mark, I wanted to ask about that. Is that unhealthy that the market is being not fully determined, but heavily determined by this one stock?
Well, a portion of the market is.
Yes,
but yeah,
thank you for clarifying.
If you're in an S&P 500 index fund, you 40% of your returns are based on 7 stocks out of 500. So what's that tell you? Yeah, it's unhealthy. Yeah. So maybe index funds aren't really the place to be anymore.
Well said, Mark.
Even from just a secular management perspective.
Yeah. 610-363-1110. Folks, give us a call. Hey, Mark, let's get to the calls here. Bill is calling from the West Coast, state of Washington.
Hey, Bill, how you doing this morning? I hope things are good. Is there something specific on your mind?
Yeah, I was hearing one of your casts about so many maintenance workers and mechanics are needed for different places throughout America.
Yeah.
And I wanted to respond to that.
Oh, please do.
Well, I'm 69 years old, and back when I was in school, they had shop programs, and not long after that, they tore down the building, and they said all of that is going to tech schools. Well, by that time, most kids have redirected their lives, and they're not going to go into maintenance. So since then, we have had an exit from that, and it's only guys my age that are carrying the load while we're all dying off. And now we do have this problem. Now, I taught shop class also in Arizona, and now I'm teaching shop class in Washington State. I was raised in Iowa, and there's a little resurgence of training these kids, but overall, it's more of an elective and not a requirement. And until we as a nation come back and start doing that, we're going to be in desperate straits.
Yeah. Well, you know, it sounds like you and I grew up very similar. We grew up with this understanding that people who could do things were heroes. You know, if somebody was broke down on the side of the road and you could pull over and help them get their car started, you were a hero. If you know, it was good to know how to use your hands, to understand how the things around you work. I took pride in hard work. I loved it when I was putting in swimming pools. I loved working out in that sun and being in, you know, being Hercules and digging and moving heavy equipment and moving heavy things. That felt good to me. But unfortunately, you're right. This world has demeaned the laborer, demean the concept of good work. God created us to work. Now, that doesn't mean he created us all to do heavy work or to do blue-collar work. Some of us, he gave the brains to do brain surgery and rocket science, and that's okay. But we should never demean the foundations of this world, and that's where people, that's where the blue-collar, the people who keep things together, the people who build the housing, the people who put the cars together and keep them running, the people who understand heating, air conditioning, electricity, plumbing. These people are very important to us, and they get paid well for what they do, but we had a society that went digital and everybody started talking about college is the only way to go. And that made everybody feel like, well, if I don't go to college, then we got into the digital world and people are trying to make money by sitting online, chatting and gossiping. And it just took it all away. I think you're absolutely right, Bill. We need to start honoring those people who can hold shovels and wrenches and pliers. We need to start honoring people and letting them know this is a good way to be. And even if you don't pursue that all your life, you have talents that everybody will admire in you and appreciate. Keep on teaching. We need good shop teachers. Shop teachers were the ones who influenced my life. And I eventually went into finance and investing anyway, but I still love working on my house. I still love helping my neighbors. And you know, I still think it's an essential part of our society. Bill, you're absolutely right. Thank you for those comments, sir. I really appreciate it. I pray God's blessing on you and that you will encourage some young men and some young women to pursue their passion in building and maintaining and construction, because we need those people. And I think God put that in us as well to do some really neat things with that. Thank you so much for your call, sir.
Yeah, Bill, was a great call. You know, Mark, I had a cool memory happen on Sunday. I can't remember if I shared this on the air or not, but on Sunday afternoon, my 3-year-old son and I got to go outside and chop firewood. And I got to teach him how to use an axe. You know, it's a small axe, and he's 3 years old, so I have to have some safeguards up there for sure. But he's learning how to do it. He's learning how to use gravity to let the axe fall down. Now, wood cutting is not real. It's kind of a lost art because you've got chainsaws now and all that sort of thing. But it's the same idea where you're teaching him hard work. Whether he goes into a trade or not with his hands, he's learning valuable skills.
Right.
That really, in some sense, the classroom can't teach. Now, it certainly can. And, by the way, Mark, I think it's important for us to just say this also. We're absolutely not anti-college. I think we're more anti-spending stupid amounts of money for a useless degree. I think that's what we're anti, right?
And we're anti-overcharging for college.
Exactly.
We're anti-wasting a college student's time on courses that are required, that do nothing to broaden their intelligence, to broaden their health, to broaden their ability to serve and care for God's creation and one another, So
absolutely.
I think education, the universities have gotten crazy, and I'm absolutely against the programming that goes on there.
Yeah.
The anti-God, anti-family, anti-baby, anti-life, anti-everything that the colleges have become now.
610-363-1110. Mark, let's go over to the West Coast one more time. Let's talk to Anna. Anna's calling from California.
Hi, Anna. Welcome to Financial Issues. What's on your mind this morning?
Good morning. My mind is on the portfolio tracker.
Okay.
And that yesterday you had a sell for, and I'm going to say the stock name because it's a sell now.
It's okay. Yeah, you can say it. Whatever. Yeah. DEA.
Okay. DEA. Yes.
Yeah.
And you did a sell on that, and I had originally bought DEA for 100 shares. Okay. So, but something I noted yesterday that was really weird, and it has to do with the portfolio tracker and DEA.
Okay.
And I apparently when I bought the 100 shares, it apparently went down around March, April to 40 shares. I'm not sure if it was a split or what. I don't know that. I don't understand how. But my question has to do with the portfolio tracker because I had originally put in the 100 number, for the shares. And I'm wondering if the portfolio tracker changes the share quantity when the share quantity changes on the stock market.
Because of splits or reverse splits, yeah. I don't believe it does that, but I don't know that. Seth, are you familiar with that?
Yeah, Anna, I'm not familiar with the portfolio tracker doing that. I think, Anna, what would be a good idea to do is perhaps we can follow up with you on a email, and maybe we can help you out more with that because this seems like more of a portfolio tracker related question. We can get our website team on this as well. So thank you, Anna, for bringing that up with us. Anna, why don't you do this? Why don't you stay on the line with Darlene? Dar, if you could get Anna's email address and we can follow up with her, I think it'd be a great thing to do.
Yeah, that'd be good. I don't believe that our tracker does that, though automatically does that.
Yeah.
So
I don't think so either.
It shouldn't.
Yeah.
No.
Yeah.
It's not a feature.
It's not a feature that I'm aware of in it. So I would like to look into that to see what possibly could have happened for you, Anna. Thank you for bringing that to our attention. And praise God that you found it and that you're involved in your portfolio, honoring God with everything you do, including your investments. And again, I'm glad you're watching it.
Absolutely. Yeah, thank you, Anna. Folks, 610-363-1110. Again, 610-363-1110. If you've got questions about that sell alert that Anna just mentioned, I know I'm seeing a lot of activity in the chat, which is wonderful. Chat audience, good to see all of you there. But call in. If you call into the program, that's the best way to get to us right away. We'll get right to your call as quickly as we can there. Guys, interesting stuff happening here. It looks like all SNAP recipients need to reapply for SNAP benefits now that they are reopened again. Sam, can you give us the quick details on this? What's been going on there?
That's right. So the Trump administration, now that the government is fully back and funded, is requiring all these SNAP recipients to, as you said, reapply for those benefits out of concerns of there being fraud. Interestingly enough, the Trump administration earlier this year had asked all the states to share SNAP recipient data to help identify this fraud. In fact, that's resulted in over 700,000 people losing those benefits. They should not have been receiving them, and more than 100 arrests. The problem is only 29 states actually complied with that, most of them Republican-led. So now the Trump administration is doing a full sweep just to make sure everyone actually is getting the benefits they need and not just mooching off or stealing from the system.
So what I'm hearing here is that because the Democratic states refused to give the information to the federal government. The federal government said, okay, then we're just going to make everybody have to re-register so we can make sure they deserve what they're getting.
Yeah, they
makes
said,
sense
fine,
to
we'll
me,
do it
Seth.
ourselves.
Yeah, right.
Makes sense. In fact, I think that it might be a good idea to every year to have everybody reapply, because once you apply, that doesn't mean your situation is going to stay the same for the next 40 years, you know?
Yeah, that's exactly right, Mark. It feels like common sense to me, and yet common sense becomes so uncommon. It feels like I'm sure there will be people out there who will cry foul and say, how dare the Trump administration be so draconic that they would require people on Snap to actually have the qualifications to need to be on Snap? That's so mean. No, I think we would say that's common sense, right?
So you just there's a little saying we had on another station I was on. It said, when evil rules, righteousness becomes the outlaw.
Yeah.
And I kind of think that fits here.
Sure does, Mark. 610-363-1110. Folks, if you have to leave us, we hope you have a great rest of the day. But for the rest of you, phone lines are wide open. We'll get to your calls and questions on the other side of this break. 610-363-1110.
My wife and I, we moved into this neighborhood. We had some experience with Crossroads Kids Club. We had served at another club. We kind of thought to ourselves, like, it would be really, really cool for us to actually bring in a club that was able to share the love of Jesus with kids directly into the school. And so we started our Crossroads at Hilltop.
Crossroads is amazing. You can learn all kinds of things about God. That He loves all of us. He died on the cross to pay for our sins. That He will help me in every way.
There is just such tremendous opportunity to reach kids in some of these areas that just aren't being reached.
Sometimes I pray every night. When I feel alone sometimes, God is right there sitting next to me. I can rely on Him no matter what happens.
Help reach kids with the hope of the gospel. Visit reachOurschools.com.
Most people have no idea what their money is funding. In many cases, they are unknowingly supporting companies that contradict their values. That's why it's so important to know who you're investing in and what they stand for. At Financial Issues, we help Christians invest with biblical values. Our daily live broadcast covers the economy, markets, and even politics through a financial lens grounded in a biblical worldview. But we don't stop at just commentary. We equip believers to manage their own portfolios, offering research-backed asset allocation models, biblically responsible stock recommendations, and practical guidance. You manage your money. We do the research. And for what works out to be only $11 a month, you get access to everything you need to invest with conviction. If you're ready to align your faith with your finances, go to financialissues.org. That's financialissues.org.
When a woman comes into a center, she's being pressured from her family, from her friends, by her circumstances, by the rhetoric of the culture to believe that this is a quick and easy way out. If a woman sees her baby on ultrasound, it doubles the likelihood that she'll choose life. And on top of that, we share the gospel of Jesus Christ with her. This is why you should support preborn. The donations that you give actually make a difference. Last year, 59,000 babies were saved because of what you have done with your generosity. And so we just encourage you to make a difference at whatever degree you can, whether you can do a $28 contribution for one ultrasound, whether you can underwrite an ultrasound machine for $15,000 or 10 ultrasound machines for $150,000. Where does the Lord have you so that you can make a difference?
To find out how you can support the life-saving mission of Preborn, go to preborn.com/FISM.
610-363-1110. Folks, phone lines are wide open. If you got questions, give us a call right now. We got plenty of time. We'd love to talk to you. 610-363-1110. You know, guys, we got some wins. Mark, it's always good to do a little winning Wednesday, right?
Absolutely. Here's a win that you didn't think about. You just said 610-363 1110, slower than I ever heard you say it before.
Huge win.
That's a win.
That's right.
We're training him. We're training him.
People need clarity, right? They need repetition, slow speaking. So thank you all for keeping me accountable for that. Yeah, Mark, that is a win. Anytime that happens, it's a miracle. So, well, what do we have here, guys, in the culture war when we're talking about Winning Wednesday? Sam, let's start in the pro-life space. What's been going on there?
So this one is shaping up to be a potential win. I like what we're seeing here. Susan B. Anthony, Pro-Life America, a major pro-life group, announcing plans to invest $80 million in the 2026 midterm election, targeting more than 10 million voters in those key states with that money. They also plan to door knock on 4.5 million doors in the major battleground states, Iowa, Georgia, Michigan, and North Carolina. Meanwhile, in a major win, this is a solid win here, President Trump signing this week the Fostering the Future for American Children and Families executive order. That was done with the help of First Lady Melania Trump. This order specifically mobilizes federal agencies, universities, nonprofits, and private employers to expand educational, employment, and mentorship opportunities for kids in foster care, specifically and especially for those who are aging out of the system. Really want to give those kids a leg up, and it also explicitly encourages partnership with faith-based organizations as well.
That's awesome. That warms my heart, especially for the foster shit. Obviously, for the preborn, we want to save as many babies and elect as many people who respect life as possible. But for those children in foster care who, they're coming of age where they're not going to be able to be in foster care anymore, not having that mentoring, not having that teaching is devastating to them. I mean, so many end up back on the street at 18, and that's just so sad. I love what just happened. My heart leapt when you said that, Sam. Thank you for that.
Hey, that's great. 610-363-1110. Core to our ministry here, folks, is I think this is true, is protecting the vulnerable, protecting the weak, especially when it comes to children. That's why we support ministries like Preborn, as well as Crossroads Kids Club. Of course, we're going to have Matt Armstrong on the program tomorrow. Looking forward to having him back on. Mark, it's going to be a great time. Yeah. So it's a wonderful thing to share in God's love, his tender heart towards children. He has a tender heart towards children. That's all throughout Scripture. Jesus doesn't say to everyone, let them come to me. Let the little children come to me. He desires that all would come to him, but he explicitly says, children come to me. He loves children. He loves the little ones, and so should we. Really should.
Yeah, and true religion is this, caring for the widows and orphans in their need.
Yeah. Amen. 610-363-1110, folks. Give us a call in here. The market's just open, guys, and they are actually mixed, which is pretty good for the markets lately. They've been all red. Now I'm seeing everything actually in positive territory. The Dow Jones
futures, the pre-markets this morning looking all right, so that was a good sign.
Yeah, they were looking all right, Sam, and now as they've opened, everything is slightly up. The Dow Jones is just above the flat line, but the S&P 500 creeping up towards about 1/3%, and the Nasdaq up about 1/5%. So they might be feeling good, or maybe just wishful thinking that Nvidia will come and save the day, as it has done so often the last 2.5 years. So interesting stuff there. Mark, let's get to a question here, shall we?
Okay.
So we've got Brandon. Brandon's 40 years old. He's saying, hey, Mark, I'm completing my FISM growth model, and the only sector I haven't entered is the Israel fund, since I'm less familiar with mutual funds. Should I hold cash until I have the full 4% before buying, or is it better to just enter gradually? And which share class should I consider as well? Are there any fees, minimums, trading factors I should know? Any guidance would be greatly appreciated. What do you think, Mark, for Brandon?
Well, Brandon, great question. Either is okay. During choppy waters or uncertain times, moving in slowly is just as good as moving in all at once when you know the clear direction of the market. I would say if you have the money, go on and move in fully. If you don't, then just take your time and go in with the money you have, a step at a time. As far as share class, that's an easy, if you can get iShares, do iShares. They're the cheapest. There's no front end. There's no back end load. The 12B, usually there's either reduced or no 12B1 fees internally on it. So overall, you have a better chance of positive returns because of the lower cost of those type of shares. If you can't get iShares, and some people would say they use B shares. I don't like back-end shares because you're just paying that too much. I would go with either the A shares then if you can't get iShares. But most platforms these days will allow you to buy in to iShares. There might be a minimum, and it usually it's not outrageous, but check with your platform to see if you can get iShares. That's where I'd go first. And if you got 2% or 1% of the amount for it, just go ahead and move it on in. And as you rebalance your portfolio, this is a good time of year to do it. Start rebalancing your portfolio, and you take some of the profit, you lock in some of the profits, and you reduce the exposure to those overly valued stocks. You can take some of that money and put it into the Israeli fund as you go. So, yeah. Good question. Thank you for that. Thank you for that question, Brandon. Appreciate it.
610-363-1110. Similar question we're getting here, Mark, from Nancy, who's 70 years old. A similar vein. She's asking about the Timothy funds. She says, hey, Mark, can you explain what are defensive funds and commodity funds and how they might differ from the other funds listed?
Yeah, defensive funds. I just love that name. Every time I hear the term defensive fund, I'm thinking of Monty Python and the Frenchman up on the wall, throwing rude comments, being, defending their fort, but being rude towards you. No, that's not what a defensive fund is. A defensive fund really focuses on stability. The whole goal isn't growth, but to stabilize during downturns and things like that. So they'll hold things like utilities, consumer staples, things like that don't move as broadly or as quickly as other things. It could also have some things like some precious metals in it to help with the inflation if we're entering into inflation times. The fund, like the defensive fund for the Timothy plan, it is actively managed. So depending on the environment, whether it's high inflation, low inflation, rising markets, decrease in markets, it will adjust its portfolio to try and help stabilize that portfolio by not falling as hard or as fast as other things. And in doing so, it also stops it from rising as fast as well. So a defensive fund is just a fund that's made to help stabilize your portfolio by investing in all sorts of things, from utilities to T-bills to all those things that are more stable and less volatile. A commodity, obviously, those are investing in things like precious metals or ags or things like that. They're immaterial things. They're very volatile. But sometimes those type of like precious metals can be used to help stabilize the portfolio too. But that's what a commodity is. So when you get into a commodity like gold or silver or beef or something like that, you're getting into a commodity. Unlike, and they're much more volatile than, let's say, the market in general.
Mark, speaking of commodities,
good question.
It is a great question. Nancy, thank you for that. We do have our weekly ag report coming here, folks. So again, once a week, we will still have the ag report on the show where Craig looks at a little bit of a broader topic for the week and kind of what the ag world's looking like for our farmers and ranchers there. Of course, you can still get the daily ag report on the website, and this one will be up on the website today as well. So here comes Craig Halgard. After this, we'll take a break, and we got more financial issues. Cue your call up right now, folks. 610-363-1110. Here comes Craig.
This is Craig Halgard with your weekly financial issues Ag Focus. Today we'll take a quick look at some tariff news and an ag bankers survey. In an executive order issued Friday, the president determined that certain agricultural products, those not grown in the United States, would no longer be subject to reciprocal tariffs. The new exemption list includes fertilizer, as well as coffee and tea, tropical fruits, fruit juices, cocoa, bananas, oranges, tomatoes, and beef. Now, fertilizers that are now exempted from the tariffs include urea, diammonium phosphate or DAP, and monoammonium phosphate or MAP. Following the imposition of tariffs back in April, we saw an immediate impact on fertilizer prices. Comparing the U.S. to Canadian prices, the tariffs now show a relative price gap that widened, with some U.S. farmers paying up to $34 per metric ton more for DAP, $32 more for MAP, and $11 more per metric ton for urea. The exemption of fertilizers is an important step to prevent further price increases in an already volatile market. As harvest wraps up, farmers will soon be making their 2020 2026 planting decisions and determining crop input needs. This is a very welcome turn of events. Well, that's all really good news. Ag bankers believe that fewer than half of America's farmers will be in the black in 2026. In a survey conducted by the American Bankers Association, farm income and working capital remain a top concern for lenders, as does inflation. Nearly 93% of lenders expect farm debt to increase over the next year. Lenders are most concerned about grain and cotton farms, with nearly 70% saying they're very worried about grain profitability, up sharply from just 15% 2 years ago. By contrast, lenders express much less concern about livestock operations, particularly beef and poultry, which continue to benefit from strong demand and high prices. Now, I believe that in order for grain farmers to weather this upcoming storm, it's going to be crucial that you have a good marketing plan in place and then aggressively execute that plan. This has been Craig Haugard with your Financial Issues Ag Focus. We'll be right back with more financial issues after this.
Are you tired of the chaos? There are a lot of things that make noise, but only a few that truly matter. As a parent, I want to leave something that will last for a long time.
Invest $300 a month increase on slowly by the time you retire.
Not just an inheritance of money, but a legacy of godly values.
Here at Financial Issues, we want to help you grow your money, but our main goal is to help you honor God with the money that He's given you.
Invest your money in a God-honoring way. Go to financialissues.org.
My name is Reagan Gardner, and I am in the 4th grade. Last year, I wanted to be like everybody else. I thought I had to act different, look different, and be different to be cool. When I joined Crossroads, I learned that God loves me just the way that I am.
Help reach more kids like Reagan with the hope of the gospel. To learn more about Crossroads Kids Club and how you can get involved, visit reachOurschools.com.
In the last 10 to 15 years being in ministry, being married, something that has been constant in our lives is Samaritan Ministries. As we've moved, we've had babies, we've had different things come up, we have just been able to rely on Samaritan in ways that we never really even thought about before becoming members.
Our heart's desire is to plant roots and be in a place for a really long time. It's how we were raised. We see the benefits of that, but we also see the open-handedness of being used by the Lord wherever He calls, because we just assumed when we started pursuing church planting, the quickest way to get from point A to point B is a straight line. And with the Lord, sometimes you find out it looks a lot more like this. And yet, Samaritan was with us through the entire thing.
We didn't have to look into, we have to change insurances now because we've moved states or whatever the case may be. And it's just been a real blessing to us in different phases of life.
I'm Kyle.
I'm Colleen.
We're the Gen X.
And we're Samaritan members.
The opinions and recommendations expressed on this program do not necessarily represent the opinions of the station or any of the program sponsors. Additionally, all products or services offered by the program sponsors may not be known by the program.
610-363-1110. Folks, you got time to queue your call up. If you've got questions and you weren't able to get into the call queue earlier, give us a call right now. In the next 2 to 3, maybe 4 minutes, we'll get to you on today's show. Don't wait till tomorrow. We got a whole lot planned for tomorrow's show as well, so get that guaranteed call in right now. If you want to call in, talk to us, do it. 610-363-1110. Guys, our show today brought to you in part by our friends at Samaritan Ministries. Just love the work that they do. Love being a part of Samaritan Ministries. Mark, I know you've been blessed by them. I have as well. Samaritan supported us 100% when my son had his hernia surgery this past week. He's now free of his hernia, so he can chop firewood with me. We don't have to worry about it, which is great. And yeah, it was just awesome.
Put that boy to work.
Exactly right. Exactly right. So just amazing stuff. You can check out Samaritan Ministries, folks. Just go to SamaritanMinistries.org. You can check them out there. Be a great thing to do. 610-363-1110. Mark, let's answer some more questions here as we've got the time to do so. Joe is asking, hey, Mark, what are your thoughts on TE12? I heard on your show that the CEO has rejected woke ideology, which is a good start. Mark, we mentioned it on that previous show, so I'll just say what it is. This is Palantir that he's referring to. He says, my broker says it's volatile and it's aggressive. I'm looking for a subtle sub for Nvidia in the AI space, and I'm thinking about this one. What do you think for Joe?
Well, it's an interesting thought. If you're trying to replace chips, this won't do it, because this is more a stock that's designed for to help companies, especially the government, with defense. So it's a defense-focused software. They do software and not chips. So they don't do hardware, they do software. So it's not the same thing, though it is a growth fund. And I just love the idea that finally we're getting CEOs and others to start speaking up and start defending their position that DEI is not a good idea, that it's better just to run on merit and not on color of a skin or somebody's belief system. They need to run on merit of what this person can do when you hire them. So I love it. I think it's a great idea. And I think the stock itself seems strong. I wouldn't see it as a direct replacement for Nvidia, but it is a growth fund. So if you're just looking for growth funds and not chip funds, it would fit well in there. And at this time, as far as deploying some of that capital towards growth.
That's
so
great.
Good question there.
Good question indeed, Joe. 610-363-1110. Next one we have here, Mark, is Danielle. She's 54 years old. She says, in regards to the recent NRG move to a hold, we are up about 326% on this holding. Should we sell and take some profits? Danielle, well done, first of all. What do you think, Mark?
Yeah, here's a thought. Being up 326% does not tell me whether you should, at this point, be reducing that as part of your portfolio. If you bought in at 1%, that means you're only up approximately to only 3% of your portfolio, which really isn't outside of the asset allocation for it. If you bought it at 3%, then now you're at 9%. Maybe you'd want to take some of those profits and trim that back at this time. So look at it as a percentage of your portfolio. Is it 3% of your portfolio at its current value, or is it at 15%? The higher you go, the more you're going to want to trim back to get it around the 3 to 5% of your portfolio to stay within the asset allocation.
That's good, Mark. Yep. 610-363-1110, folks. Again, 610-363-1110. Mark, looks like we're getting a call here. Nelson is calling from the state of Louisiana.
Louisiana, welcome to Financial Issues. What's on your mind this morning, Nelson?
When inquiring minds in the chat want to know about F45, wondering if it's going to go the way of Cody.
F45. Let me take a quick look here.
Yeah, I've got that one, Mark. If you want me to give it to you, I can give it to you right now. Nelson, while Mark's looking at that, I'll tell you, we've got eyes on it, seeing the news this morning about the calling off of the merger there.
Oh.
That one there, Mark. Yep.
Yeah, well, at this point, I don't have a comment on it because I haven't done the research with the merger called off there. So I'll have to say somewhere within the next couple of days, I'll probably have a comment on that for you. That's all too new for me to make a comment without digging deeper to see why the merger's off, what are the implications of the stock and whatnot. But it's so good to see that the chat room's all over that already.
You guys are on it, Nelson.
It just tells me that we got a lot of great partners that are staying on top of things.
Yep. Appreciate the call as always, Nelson.
Thank you.
Yep. Thanks, brother. Yeah, that is good to keep an eye on there, Mark, for sure. Mark, let's get to this next question here. Let's go to Steve. He's 67. He's saying, hey, Mark, I'm now a retired income investor. What do you think of liquidating the 2% sectors, such as industrial materials and the Israel funds as well, and rolling them into a higher dividend preferred and fixed income bill? Would that increase income and reduce volatility? What do you think?
Interesting question, and a little bit different thoughts going on, connecting to different thoughts. I would say that it's a little difficult to answer the question the way you brought it in, but the idea of getting rid of some things because they're smaller portions of your asset allocation. That reduces your risk reduction through diversification. That's the first thing that popped into my mind. Also, the Israeli fund, when you're buying an Israeli fund, you're not buying a single stock. You're buying a mutual fund, which contains dozens upon dozens, possibly even hundreds of, over 100 different stocks in a certain area. The Israeli fund invests in Israeli companies. So I'm going to say probably several dozen different companies in Israel. So what you want to consider is you're really selling off a whole bunch of stocks in that. I'm more comfortable using a broad-based tool like a mutual fund and keeping it in there. The other things that you talked about, what were the other two that he suggested?
So he's talking about
sectors,
the industrial and material sectors as well.
Yeah. The only thing I'd look at on that is if you follow that logic to you end your asset allocation strategy to reduce your risk through diversification, and things become more consolidated in one area. And if you're moving them to higher income type buys, the idea there is you would end up losing part of the growth portion of your portfolio that helps your income maintain its buying power by growing your portfolio so the income grows as well. So you got to be very careful about doing that. The strategy we use, the diversification strategy, is one to help make the valleys a little lower and make the ride a little smoother as you're climbing up and keep the income there. The more you de-diversify from where you're at, the more volatile your portfolio could get, and the possibility of lessening the growth to the point to where your income can't keep up with inflation and taxes down the road. That's my thought on it. I hope that helps in your consideration.
Yeah, that's great, Mark. I think we got time for one more here. Carla is 72. She says, hey, Mark, we sold Civitas at a loss to help offset the gain from Nvidia. Should we buy it back after 30 days or move on to something else? It does pay a really good dividend. What do you think?
Yeah, it does pay a good dividend. There's all sorts of wonderful things. Here's how that works, and I know you know how it works. You sold it. You harvest the loss, and then you have after 30 days, you could buy back in. Well, what I would say is let's look at it in 30 days after you sold it, because between those 2 days, if it was a hold and if it's a strong stock, which, by the way, there are some positive things about it, like you said, the dividend, if it's maintained its growth and its earnings and the projections didn't turn, and if something didn't get revealed like we saw on another stock earlier this month that the government's auditing it for the way it did it, reporting and revisions and things like that, to where there might be fraud involved in their reporting. If those things don't appear in there, then I'd say, yeah, let's buy back in. So most likely it's a buy back in if it's still on the buy list. If it's not on the buy list or the hold list, then no, I wouldn't do it.
Yeah. That's good, Mark. Boy, it was great to get to all these questions here. Interesting things I'm seeing, guys. We can squeeze this final headline in before the end of the show, which always comes at the end. It's the worst. But it looks like Trump is lifting tariffs on certain food items. Sam, should we be preparing for a break in prices when we're talking about our coffee and things like that?
Well, only if you like your mangoes, your pineapples, things like that. So yeah, this is lifting tariffs on over 200 food items, pretty much stuff that can't be made easily in the United States. We're talking, like I said, tropical fruits, nuts, spices, things along that line, coffee, tea, cocoa. So we'll help a little bit, but it's not going to drastically change the situation at the grocery store right now.
I don't know. It might make Christmas a little happier for us.
That's true. Yeah.
Because all that
spices.
I mean, think about that. The cost of fruitcakes just went down. That's
talking my language, Mark.
So that's a good thing. I love that he did that, and I love that he's being aware of how this impacts us common people, and not because I'm sure he doesn't ever have to think about what his cup of coffee costs.
Right.
So it's good that he thinks about us, and he's trying to bring costs down, and he's working so hard at it.
He probably drinks McDonald's coffee, so he doesn't really have to worry about that anyway.
Right.
There you go. And, we're all happy about that, but we're happy just because he loved, we love the Lord. He's doing things that help us to love the Lord and be stable. And, we can then focus on our portfolios and investing with biblical integrity and impacting this world for Christ. It's a good thing. Thanks for joining us, everybody. I love being with you, and I hope you love being with us. Look forward to seeing you tomorrow. God bless.
If we ever forget that we're one nation under God, then we will be a nation gone under.
Thank you for joining us. This has been an FISM production.